In the world of investing, stories of individuals who take bold risks, defy odds, and achieve financial freedom have always captivated our imagination. These are tales that feel larger than life, stories of ordinary people making extraordinary decisions and achieving outcomes that many could only dream of. Among these captivating narratives is the incredible journey of Jason DeBolt, a man whose steadfast belief in Tesla and its vision not only changed his life but also serves as a profound example of what is possible with unwavering conviction, strategic planning, and an eye on the long-term prize. Jason's story begins in the early 2010s at a time when electric vehicles were still seen as a niche market, far removed from the mainstream automotive industry. The idea of cars running solely on electricity was often dismissed as impractical or overly ambitious by many experts. However, Jason was one of the few who saw beyond the skepticism. What he saw was not just a car company, but a revolution in transportation and energy, spearheaded by Elon Musk's Tesla. His journey into investing started like many others, with curiosity and a desire to grow his wealth. However, Jason's approach quickly diverged from the traditional path. In 2013, with Tesla's stock trading at just $2.50 per share, split adjusted, Jason made what many at the time considered a bold, if not reckless, decision. He invested heavily in Tesla, putting not just his savings but, over time, nearly every spare dollar he could find into the company. For Jason, this wasn't just a financial decision. It was a leap of faith and a vision for the future. In the early days, Jason's journey was anything but smooth. He vividly recalls the fear and uncertainty that accompanied his early investments. Every transaction was terrifying, Jason admitted in an interview. When Tesla's stock doubled from $30 to $80, pre-split, I thought maybe I was making a mistake. It seemed so risky at the time. However, Jason held firm, guided by his belief that Tesla was misunderstood and undervalued. While others hesitated or sold their shares during the company's early volatility, Jason's conviction only grew stronger. Jason's strategy can be distilled into several key principles, each of which played a pivotal role in his success. The first of these is investing aggressively in high-conviction stocks. For Jason, Tesla wasn't just another stock, it was the stock. He spent countless hours researching the company, understanding its technology, its leadership, and its long-term goals. He believed in Tesla's ability to revolutionize not just the automotive industry, but also the energy sector. This belief gave him the confidence to go all in on Tesla, even when others doubted its potential. However, this aggressive approach comes with significant risks. Putting a large portion of one's portfolio into a single stock goes against the conventional wisdom of diversification, which aims to spread risk across multiple investments. Jason's strategy required an extraordinary level of confidence and a willingness to accept the possibility of significant losses. For most investors, such a concentrated approach would be too risky, but for Jason, the potential rewards outweighed the risks. Another cornerstone of Jason's strategy was his long-term buy-and-hold mentality. While many investors attempt to time the market, buying low and selling high, Jason took a different approach. He believed in the power of holding onto a stock for the long haul, allowing time and growth to work their magic. This mindset required patience and the ability to withstand short-term volatility. "I don't believe in buying on dips or trying to time the market," Jason explained. "If you have a long-term vision, it doesn't make sense to worry about short-term fluctuations." This philosophy was tested numerous times during Jason's journey. Tesla's stock has experienced dramatic swings over the years, with periods of rapid growth followed by sharp declines. However, Jason's unwavering belief in the company's long-term potential allowed him to stay the course. He weathered the storms, refusing to sell even when others panicked. This resilience is a hallmark of successful long-term investors and a testament to Jason's commitment to his strategy. One of the more controversial aspects of Jason's approach was his use of margin to amplify his investments. Margin trading allows investors to borrow money to buy more shares, increasing their exposure to potential gains. For Jason, this strategy paid off handsomely as Tesla's stock price soared. However, margin trading is a double-edged sword. While it can magnify gains, it also increases the risk of losses. A decline in the stock price can trigger a margin call, forcing the investor to sell shares to cover the loan. This added layer of risk makes margin trading unsuitable for most investors, and even Jason approached it with caution. Beyond his use of margin, Jason also adopted a highly disciplined approach to reinvesting all available capital. He didn't just stop at his initial investment. He continuously funneled additional funds into Tesla, redirecting bonuses, savings, and even the proceeds from selling his house into the stock. This relentless focus on reinvesting is a testament to Jason's belief in Tesla's potential and his willingness to make sacrifices for the sake of his long-term goals. Speaking of sacrifices, Jason's journey is marked by an extraordinary level of personal commitment. At one point, he made the decision to live out of his Tesla Model 3, choosing to save on rent so he could invest more in the company. This level of dedication is rare and underscores the extent to which Jason was willing to align his life with his investment strategy. While such sacrifices are not feasible or advisable for everyone, they highlight the depth of Jason's conviction and his willingness to prioritize his future over his present. Fast forward to 2021, and Jason's story reached a remarkable milestone. At the age of 39, he retired with a Tesla portfolio worth over $12 million. This achievement is a testament to the power of conviction, the rewards of long-term investing, and the potential of focusing on high-conviction stocks. However, Jason's journey also serves as a reminder of the risks involved in such an approach. For every success story like Jason's, there are countless others who took similar risks but did not achieve the same outcomes. Jason's story is not just about financial success. It's about the mindset and strategies that made it possible. His journey is a powerful example of what can be achieved when vision, determination, and opportunity align. However, it also serves as a cautionary tale, reminding us that every investment decision carries risks and that success in investing requires not just knowledge and strategy, but also resilience and a willingness to adapt. As we reflect on Jason's incredible journey, it's important to ask ourselves, what are our own goals and aspirations? What risks are we willing to take to achieve them? And what sacrifices are we prepared to make along the way? Each investor's journey is unique, shaped by their circumstances, values, and vision for the future. Jason's story is a source of inspiration, but it also challenges us to think critically about our own path and the steps we're taking to achieve our dreams.